As a property investor, business person or entrepreneur, you need to understand more than just your craft. You need to keep an eye on Australia's economy. And while the variables influencing our economic growth are numerous and complex, there's one particular driver whose overwhelming influence is the final say. And that's demographics. I found the significance of demographics is perhaps underappreciated by most investors. And that's unfortunate given its impact can be found on almost all aspects of our economy and our property markets, from economic growth and consumption to interest rates and valuations, and even to the velocity of money and balance sheets of the world's central banks. I guess what I'm trying to say is demographics is what ties it all together. But I guess because the trends are slow moving and long term and not easily visible, they tend to be ignored by many, but they shouldn't be. And that's why I have my regular chats with leading demographer Simon Kuestenmacher. And today we're going to talk about some recent forecasts that are going to have a significant impact on our economy, on employment and our property markets. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
As a property investor, I've been a lifelong student of demographics because demographic changes influence the underlying growth rate of our economy, our unemployment rate. They directly influence our housing market trends, living standards, our savings rate, consumption, and the demand for financial assets. Look, as you can see, demographics creates our destiny. So if you want to become a successful investor, you really must understand the demographic changes ahead. And that's why I enjoy my regular chats with Simon Kuestenmacher, one of the co-founders of the demographics groups, and his columns and his media commentary focus on the current socio-demographic trends and how these are going to impact Australia. So welcome again, Simon.
Thanks for having me back, Michael.
Now, Simon, as a demographer and as a futurist, I know you get excited when new data comes out, when new projections are released. So you must have had a great time recently when the National Skills Commission published their latest 5-year employment projections.
Absolutely. And I wrote a very enthusiastic column about this data set because in times of COVID, in times of lockdowns, it is so easy to lose sight of the bigger picture because you are caught up in daily case counts and so on. So it's helpful to have a very strong agency to provide a data set that looks into the future for 5 years. Of course, there are uncertainties in those predictions, but the general direction of those forecasts are incredibly important. The first positive observation was that we will add 1 million jobs to Australia over just 5 years. That is just a tiny bit less than in the 5 years leading up to the pandemic. But so we see growth in Australia. That's good news. Everybody should be happy about this. More job growth means more commercial property, means more homes, means more everything. Australia is going to benefit from this. But it's much more interesting to look at those jobs at a more detailed level to understand that 53%, more than half of all the jobs that we're adding to Australia, require a university level education. That is huge. At the moment, only 32% of all jobs require university level education. So we're further transitioning Australia towards a knowledge economy. It's a big transformation that is moving around. And that is absolutely important if you're thinking about properties, for example. Those university trained jobs, these are the people who work from home, for example. So we do know that the demand for studies, Zoom rooms in the homes that those people will seek out will increase. So that has a direct impact on the property sector, for example.
Well, it also shows those sort of people who are going to have a higher income are going to be able to keep buying properties, improving their properties, renovating or renting because they don't all necessarily want to buy. But it also means to me that there's going to be a bit of a hollowing out of the Australian workforce, Simon. It continues to turn us into a society of, I guess, high income earners and more low income earners flanking this eroding middle class.
Oh, absolutely. And that's the same trend that the forecasts are actually telling us about. Lots of job growth at the top end, strong job growth at the bottom end, and very moderate, almost non-existing growth in the middle. So we're hollowing out the workforce. Instead of the workforce looking like a bell curve with a big middle class and small numbers of rich and poor folks, the workforce looks like the letter U. Lots of rich folks, lots of poor folks, a very small middle class. That, of course, means that those people demand very different things from their family homes that they are purchasing. So we do need to expect strong growth at the top end of the market. So the big property developers for fancy dwellings, they will do really well. That's, of course, the end of the market that you will want to operate in anyways, because the margins are nice and high. But you're increasingly creating a big lower class of the property market that will struggle to afford a home. So it's probably the rental market that they will seek out for their housing. That then, of course, means the share of renters is going to continue to grow, which isn't a bad news if you are a property investor, because it means there will be more people that might be keen to rent a property. So more opportunities for you to purchase and then rent out a property.
Well, I think it's important to understand how our demographics is changing. In other words, baby boomers for a long time were the ones who were driving things. I mean, there were so many more baby boomers than there were generations before them, and people talked about a tennis ball through a hose pipe. I recently heard a pig through a python, which was an interesting expression of the same thing, where basically me as a baby boomer, my generation required more kindergarten, schools, universities, hospitals, and I guess now nursing homes. But I think a favourable working age population is going to be really important for us too, Simon. It's going to boost our economic growth. It's going to provide inflationary pressures if we've got people at the right age groups at the right stages of their life spending money in particular ways.
Absolutely. We always say that you want to run an economy with as many people in the high spending phase of the life cycle as possible, because the high spending phase is also the high earning phase of the life cycle. So it's everybody wins out. Just by sheer luck, call it dumb luck, Australia happens to run or go through the pandemic, through the lockdowns, at the stage where the gigantic millennial generation reaches family formation stage of the life cycle. That means the millennials are now in their 30s, will over the next decade reach the 40s, which is the phase of the life cycle where you already had a couple of promotions. So you have reasonably high incomes and you have 1.7 kids at home and you have a big fat mortgage. So it means there's lots of spending opportunities there. That means all the money that you earn goes straight back into the economy. You buy white goods, you buy cars, you renovate, you buy a first home, you buy stuff for the kids. Spending doesn't end when you're in your late 30s and mid 40s, really. So that's good news that we just happen to go through this phase of no migration, negative migration actually to Australia, with a big millennial generation, because this buffers, let's say, it softens the economic fall. That's excellent news. And it's one of the reasons why we should be optimistic about the future of Australia, because even though the lockdowns here might go on for another couple of months before we go into a COVID normal phase, and then, economic growth can go up unstopped, that's good. We really have the millennial generation to thank for the high spending efforts. And of course, Gen Xers who upskill or who upgrade their family home to the next bigger property. That's also good. But it's really the millennials that kept house prices high over the last year.
Sure, they're changing requirements. Now, getting back to that report, what are the main types of new jobs that we're going to need moving forward? What are the growth occupations in Australia?
So if we first look at the industries, the by far biggest industry is healthcare. And that doesn't come as a surprise, because we are an aging country and we are a rich country. We can afford to grow old. And also at the same time, we are introducing more and more changes to the NDIS, the National Disability Insurance Scheme. So that means there are endless opportunities for carers, for nurses, which are the two fastest growing jobs in Australia. Just through carers and nurses, we will be adding 110 or 130,000 jobs, I think it is, over the next 5 years. So that's gigantic. And part of the problem that we're seeing here is we're creating a market. Nurses are reasonably well paid. They're not extremely well paid, but they have decent incomes. The issue is more with the aged and disability carer jobs, because these jobs aren't paid very, very well. And we're creating over 50,000 of them. So that means, how do those workers afford a family home? How do they manage their life on their low incomes? That's a more difficult question. And we then reach the lower end of the housing market. We need to think about, how do you service those populations? And I always come back to pushing for more social housing. If we're creating those low-skilled jobs at scale, and nurses and carers, they will be a big surprise. They will be clustered near medical centers. They will be clustered where the population is. So that means you will have need for more carers in more expensive areas. They can't possibly afford a home nearby. So you do need to find some sort of social housing mechanism to provide housing for those essential workers. And that's a big challenge that the housing market per se, the free market, will struggle to provide. So I do think we'll need more public investment into social housing, into essential worker housing, to make sure that everyone in Australia has a fair go in the future.
And what other knowledge jobs are going to be needed more moving forward?
Yeah, so the knowledge jobs, lots of those IT professional services jobs are booming like crazy in the absolute numbers. If we look at the percentage terms, where we have completely new fields emerge, these are jobs that don't even require a university training, simply because there are no university courses out there. I'm talking about very specific niches here, like crypto, blockchain currency, cybersecurity. These are jobs that are in gigantic demand because everybody wants these workers. There's no one out there who can do those jobs. So if you happen to be a young teenager who, for some weird reason, got into programming, a bit about blockchain, a bit about cybersecurity, dabbled in hacking, if you will, don't go to university ever. You will get a 6-digit job straight out of high school, because no one has those jobs around. So it's a wonderful opportunity for the very specifically high-skilled nerd class, if you will. But at a bigger level, we are adding accountants. We talk a lot about all those accountants will be made superfluous by AI, by technology, not in the near term. In the near term, we'll definitely see more growth in all of those jobs. Simply, if you grow Australia, you do need more accountants. You do need more consultants. All those jobs are growing, and they're paying reasonably well.
So the statistics suggest we're going to grow almost 1 million jobs over the next 5 years. We're going to need those people. I guess that means we're going to have to open our borders, but we know that's going to happen. Now, I know the Australian Bureau of Statistics divides jobs into 5 skill levels based on the educational requirements to obtain these jobs. And in general, skill level 1 workers, they earn more than skill level 2 workers, and considerably more than skill level 5 workers who don't require educational qualifications. Now, of course, this isn't a judge of people or their intelligence, but your skill level is a major determinant of how much you're going to earn over your lifetime. And with regard to property, it means, I guess, it's going to decide where you can afford to rent, to buy, to live. So looking forward, which skill levels do many of these new jobs that we're going to need fall into?
Yeah, so if we look at these big picture perspectives, more than half of the new jobs that we're creating fall in skill level 1. So we have this big need for highly trained people. That doesn't come as a surprise if you know that we're transitioning more and more towards a knowledge economy, globally speaking so as well, but particularly in Australia. We're creating lots of skill level 4 jobs, those low skill jobs. A quarter of all jobs will be in skill level 4. These are jobs that require some sort of qualification, a driver's license to become a truckie, but not too much training. And we're creating somewhat, actually not too many skill level 5 jobs, which is good news. Skill level 5 jobs are jobs where you only paid by the item, by the gig, extremely low paid jobs. In an ideal world, we'll have all those skill level 5 jobs filled by people who are in education, who are training to receive a higher level job in the future.
So they're going to do it part-time, you're suggesting?
Exactly. And you do this part-time while you are studying to become a lawyer, while you're getting your trade certificate or something like this. That would be the ideal case. It's much more difficult, society speaking, if you have more and more people rely on their family income on a skill level 5 jobs. That's very difficult because you'll never, you can't create a financial buffer. You can't create a saving, enough savings to afford a mortgage or anything like this.
So the fact that we're going to require all these jobs and our economy is going to pick up once the vaccination rates are at a higher level, once the borders start opening locally and also internationally. But during these difficult times of lockdown, Simon, it's sometimes hard to keep positive. It's hard to keep optimistic and future focused. But apart from the employment figures, I know you're also optimistic about a number of other drivers of our economic future. What are they?
The first one I hinted at already is the idea that our demographic profile in Australia just was skewed in our favor. That means we had a big millennial generation that buys a lot of stuff, that keeps the housing market nice and high. So that is excellent news for us. That we
As
really
opposed to other countries like Japan with an aging population. If we had only baby boomers, I can't buy another car. Simon, I've got a TV in half the rooms in my house. I don't need any more. But I know my kids who are growing up and having kids, their own children, they're needing new equipment in their house, new furniture in the house, another bedroom for a child. So it does make a difference to your spending habits, doesn't it?
It's a big predictor of how much you will spend, and that's so that was good. Just the demographic profile, we lucked out in Australia. Excellent. So that means we can go through 2-3 difficult years just fine. So that's positive. The other good news is that one of the big economic drivers to Australia will recover very soon. That's the international students. This market completely evaporated because why bother paying a super high fee to get an online degree from Australia? That doesn't make sense. You want this in-person university experience. You want to have a gateway for the most talented international students to become a permanent resident here, or then later on a citizen. So that's really what you want to provide international students. And the good news is, as soon as borders open up, international students will be back at record numbers, or pretty much at pre-pandemic levels. That will again drive life back into the inner cities where most of our universities are located. Those purpose-built student towers will be filled up. And if you follow the market around those purpose-built student housing providers, they're actually building more towers at the moment. They're purchasing more stuff. These guys are extremely optimistic about the return of international students. Internationally speaking, all of those source countries from where we get our international students from in Asia largely, they are continuing to transition into more knowledge economies as well. So they need more university trained people that come from English speaking backgrounds. So that's huge. The growth opportunity is there. Positive sector international students, they will be back. So that sets me in a positive mood.
You're not worried about China suggesting that their students shouldn't be coming to Australia?
Of course, China can, and the cohort of Chinese students might well shrink a bit. But we will definitely see that the number of students from Hong Kong will skyrocket. We'll see that India has endless demands for international students. So really, I think Australia will manage just fine.
I think that's an important point to make, that as China has now become a more industrialized, capitalized nation, there are others underneath them, like India, like Vietnam, that's not only going to help our students, but also other areas of our economy that are going to follow China.
Absolutely. And I think in general terms, anyone who is following geopolitical news around the world from Australia, you kind of see that it's risky to put all your eggs in one basket and only rely on China. So everybody now is looking to diversify their supply chains as much as they can. If China is the best place to produce something, people will still produce in China, but you will want to set up alternative routes, just get a bit of your supplies from somewhere else. And then if China is flexing their muscles a bit to shock Australia, you can move down the alternative pathway. So that's the security backup solutions that Australian businesses are pursuing during the lockdowns.
So apart from students, I can see moving forward that international talent is going to want to come to Australia as well. We're going to be seen as a safe country to live in, an economy that's going to boom, and it would be attracting the sort of people who probably in the past would have gone overseas to have their high-paying jobs.
Oh, absolutely. There are two questions when we think about will international talent return to Australia. The first one is, will we let them into the country in the first place? I think we will. If we look at the job forecasts that say we'll add over 500,000 highly skilled level 1 workers, we can't fill those jobs possibly in any scenario with the people that are already in Australia. So we do need high-scale migration from overseas to fill those high-skilled jobs alone. So therefore, Australia will open up its borders as much as they can. So that's good. Will the demand be there internationally from people moving to Australia? I think overall it will, because people, especially in those footloose high-tech industries, they can work anywhere. And will you then pick a livable, beautiful city, or will you pick some industrial hellhole? And that's really where our livable cities, they are our draw card to attract people to Australia. And this is where I'm also a tiny bit critical, is we must not risk losing this reputation. At the moment, if you read international news about what's happening in Australia, some people criticize Australia's zero COVID strategy as saying this is too harsh. You're taking away too much, lifestyle from the people. And we must really now slowly move back to becoming a very positive, open lifestyle, easygoing country again. We need to reteach ourselves these skills, and then the Australian brand will go untarnished, which is important for us because we want to attract the best and brightest talent from across the globe. And I do think overall we will continue to do so, particularly with international students being there, because if you do international education right, you upskill people accordingly to your own needs, and you only pick those people that have the right language skills, that have the right professional skills, and then you get a custom, tailor-made, wonderful workforce entering, their career years in Australia. So that's very positive.
So, Simon, that's the people. But what about the big companies? What about the big international corporations and investors? How do they view Australia?
Yeah, if you put yourselves in the shoes of a big Canadian pension fund who has billions of dollars to spend, where are they going to spend the money around the globe? Sure, they could put it into the fastest growing economy over the last 10 years, which of course was
Ethiopia, of all places. I've listened to you before, so I know the answer to that one.
And that's such a highly risky bet that people are not willing to make it. What those pension funds are looking at is actually looking for safe and stable investments. So they're looking for Western, or not necessarily Western, but industrialized economies that are democracies, where the rule of law rules supreme. And there are not too many of those out there. And you want them to have a growth profile, a growing economy. Australia, New Zealand, we are growing. Europe is stagnating in certain areas and is shrinking in other areas. So it's probably not so great to put this into Europe. America, of course, you still invest into America, but there are too many internal conflicts. You would therefore diversify if you're an international pension fund. Money is cheap at the moment as well. So those big institutional investors, they really scan the globe to purchase infrastructure, to build infrastructure, because infrastructure, for example, gets you nice and steady, but not massive returns. And we can benefit from this in Australia. We can get international money to build out our infrastructure, to therefore better improve the connectivity between our capital cities and our regional hubs. Therefore, spread out the economic growth more evenly across the country. Spread out house price growth, meaning you make certain areas more affordable, even though regional Australia will get more expensive if you have people moving there. But that, in general terms, I'd say, international capital thinks of Australia and New Zealand as very attractive locations. So therefore, people will continue to invest into Australia. That means we get money into our continent, and therefore we can continue to produce stuff, we can continue to build stuff, and that will help us at a macro level to get through the next decades in a wonderful way.
I think it's important to remember that, because with the continual conveyor belt of negative news, the messages about COVID and the lockdowns and businesses and mental health, we've really got to take a big picture. And so even though we are going to be facing challenges and headwinds over the next decade, and the pandemic has put a number of our lives on hold for a period of time, there are some good prospects ahead. Australia is going to grow stronger. We're going to have a prosperous decade ahead of us. People are going to flow back, capital is going to flow back, and life's going to get on to normal again. So thank you for those messages of good news, Simon, and I look forward to our chat again real soon.
Oh, fantastic. Looking forward to being back on soon.
In a moment, I'm going to share my mindset message with you. But if you got some benefit from my chat with Simon Kuestenmacher, and you're also confident about the future of Australia's economy, our lives, and our property markets, now's a great time to get all your ducks in a row and take advantage of the property boom that's still got quite some time to go. Sure, our markets are moving on, but not all properties are going to increase in value at the same rate. A rising tide doesn't really lift all ships the same. So now more than ever, correct property selection will be critical, but it's even more important than that. You've actually got to start off with the right plan to help you get to where you want to go. And that's what our team at Metropole does. Why not go to metropole.com.au and find out how my team gives you direction, guidance, results, how it actually does more than level the playing field. It stacks the odds in your favour, because we start off by putting a strategic property plan together for you, and then you can choose to use our buyer's agency, wealth advisory, property management, business advisory, financial planning, renovations, development. Boy, we've got a range of services, but they don't suit everybody. But maybe there's something for you. So why not go to metropole.com.au, find out about what we do, how we can help you, and why not have a chat to discuss your options.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to share a lesson I learned from watching a movie. A couple of weeks ago, I watched an old American sporting movie, a baseball movie. It was called In a League of Their Own. And in one memorable scene, one of the team players, Dottie Hinson, tries to quit the team, telling her manager, who happened to be Tom Hanks, in the movie he played Jim Duggan, she said to him, "It's just too hard." Duggan replies, "It's supposed to be hard. If it wasn't hard, everyone would be doing it. The hard is what makes it great." Now that made me think, this is exactly the same thing with life, with your property investments, with your business. Don't let anyone tell you that being a successful property investor isn't hard. It is. Don't let anyone tell you that building a profitable business isn't hard. It is. Don't let anyone tell you developing financial freedom isn't hard, because it is. But on the other side of that challenge, on the other side of that difficulty, that's where the reward lives. And those that battle through the challenges get to reap the rewards. What kind of rewards? Well, look, there's too many to mention, but a few ones could be more choices in life, the ability to go to work because you want to, not because you have to, and of course the financial rewards that come with success, whatever that means for you. Whether it's knowing that you don't have to worry about money for your family, or the ability to make a significant contribution to charities of your choice, or even if it's just to buy yourself a nice present, a reward. All those rewards, though, aren't given. They're earned. And it is hard, but it's worth it. So the next time you want to quit when facing your first, your second, your 100th, your 50th, I don't know, 1,000th challenge, just remember what that rascal in the movie Jimmy Duggan said. It's supposed to be hard. If it wasn't hard, everyone would be doing it. The hard is what makes it great. So now go out there and be great, and don't worry about stumbling along the way. If you got some benefit from my chat with Simon and you got some insights into what's ahead for the future, and you know somebody else who'll benefit from it, why not tell them about the Michael Yardney podcast? I'll of course be back again real soon, but you can catch me in between these twice weekly shows on social media. Just look for Michael Yardney, or why not join our private Facebook group? Go to Facebook and look for the Property Update private Facebook group, where each day I leave some information, some tips, some tricks, some charts. I'll be back again real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?